The following is a presentation of TFNN. The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien and Tommy O'Brien.
Welcome, folks. We appreciate you growling and prowling with us out here. Right now, we have the Dow Industrials up 103. You get the NASDAQ up 29. S&Ps are up 8.5. Gold contracts down $35 at $11.28. You have silver down $1.13 at $16.08. Platinum is down 15 at $9.09. Oil's down 64 cents, trading at the $51.44 a barrel. 10-year note down 16 ticks, 122.29. 30-year bond off 8 ticks, 148.08. And King dollar up 1,400 ticks, 103.145. Tom, the dollar is wrecking commodities.
A lot of action all over the place, man.
Taking them apart.
Gold markets everywhere.
No doubt. The bond move is going to be interesting, folks, watching this bond move shake out, because the bottom line is that the Fed went up on the short-term rate, no doubt 25 basis points. You not only did that, they're saying they're going to go up 3 times in 2017. Now, in 2015 and 2016, they said they were also going to go up 3 times, and they ended up going once both times. We'll see where the whole thing shakes out. If we do go over...
There's a few different variables in the equation this time,
Oh, man,
right?
there's a lot of them.
But there always is. But,
no, there is.
But there definitely is.
There's no doubt. The disconnect that looking out here, which is really intriguing, is that you get the Dow stocks are still up. The tech stocks, what does get interesting is this, is that what I didn't actually realize is I knew the high industrial stocks, our big Dow stocks, right, had like 40% of their earnings overseas. What I didn't realize is that tech companies like Oracle was saying they had 60% of their sales overseas.
Okay.
So it's like, okay, so is that why the NDX took so long to basically get up into its highs? You know what I mean? So it's like, okay, so we'll see where this whole baby is going to shake out. But if we go over to that gold market first, we take a look at gold. The gold out here, it was hanging out at down $32. Took another leg down just a few minutes ago. And what you're doing right now is that we'll see whether it can hang on to this 1127. When you take a look at the continuous contract, where the danger is now, okay, this is pretty intense, because the danger now is that you hit 1126, and we're still coming into a Friday, and when you go back here as to how we broke off the bottom in January, well, the bottom of that bar is 1115.30.
We're right there, man.
Yeah, it's,
$12.
Yeah, that's nothing.
Yeah.
That's nothing in the gold market.
Yeah.
There's no doubt about that. There's no doubt about that. If we go take a look at the small caps, now the small caps gave the best indication, well, not the best, but it gave the most amount of information out, meaning that you came down so hard yesterday inside the small caps. So it's going to be intriguing today to see if, in fact, the small caps can hold this price here. What we have just done at the open is that you got into the downdraft that was right at 2 o'clock. And, it's testing that area right now. So, this is going to be, what's so intriguing on this one, on this move right now, is that you have the Fed, we get the move here, and now we got quad witching tomorrow.
Yeah.
And when we're talking about quad witching, let's go over to our man, Mr. Kevin Hinks from TD Ameritrade, Thinkorswim. And don't forget, folks, every trading day, right here, 12 to 1 Eastern Standard Time, Kevin Hinks, Scott Connor, they have an amazing show. You want to know options upside down, folks? Guess what? 12 to 1 Eastern Standard Time. It's free. It's an amazing education. Right on your cell phone, TFNN.com, hit Tiger TV. Kevin Hinks, what's going on?
Good morning, the O'Brien family. How's everything?
Good morning.
Man, I'm telling you, I'd be a lot better if the dollar wasn't up 1,400 ticks.
Oh, my. Can you believe the move in the dollar?
I tell you.
That is a big one.
It's a monster, man. And, what's going to be so intriguing here, there's not much in the way from this to 113. That's technically, fundamentally, I don't think it can go there without destroying the market. But guess what? It is what it is, man. Do you know what I mean? It's like,
Well, right. The question that you have to ask now, Tom, about the dollar is, when does it start creeping into corporate profits?
oh, yeah.
Right? When are you going to start seeing a headwind on some of these stocks? Because, let's face it, the rumor is, the general knowledge is that 27 of the 30 Dow stocks do better with a higher dollar or a lower dollar.
Right.
So it can't help but somehow affect, these stocks. It's definitely going to I believe you'll hear at, earnings, as the earnings start coming out in January for fourth quarter, you're going to hear the dollar come up a lot. And now this just throws a whole new level of discussion on the dollar because it is loose. It's off the leash now.
It is, man. Well, I had just said to Tommy, I was surprised. I knew that, the Dow stocks are big companies overseas, that there's a lot of the earnings there. What I didn't know is that, like, Oracle come out yesterday in that, meeting with Trump, like 60% of their earnings come from overseas. It's like, man, oh, man, that's a big number, man. That's
right. Any multinational, anyone who sells goods and services overseas is going to be affected by a higher dollar. All their goods just went up in price.
Nah, no doubt.
From Europeans. So, it's going to be heavy. It's just the way it is, right?
And we got Quad Witching tomorrow. We got a great program today, 12 o'clock, folks. Check it out right at TFNN. Go to Tiger TV. Kevin, you have a great one, a safe one. We look forward to the show today.
Always a pleasure, guys. Have a great day.
Thanks, man. Have a great one. You stay right there, folks. Tommy and I are coming right back. Dow right now is up $1.02. Nasdaq's up 25. S&P's are up 8.5. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We have the Dow up 103, Nasdaq up 28, S&P's up 8.5, and Thursday, folks. Thursday is Natural Gas Day, 10:30 in the morning. And if you haven't test drove the Nadex platform yet, bottom line, come over to our website, check it out. And this is a great time, never mind just natural gas, just in general. The amount of movements that are in all these indices are pretty intense, folks. So when you hit the banner, you can bring it up. They'll put $25,000 of paper money into your account. Okay, so where are we at in natural gas?
Yeah, so natural gas is right back here. We're looking at the January contract. Here's the chart. We're trading at about right at 350. It's always nice when it loads. Now 350, 19, and all those ticks definitely matter. But we're very close to 350. And pulling up the 11 a.m. spreads, there's ones that do work out well if we want, with about 20 cents on each side, which is a huge move. Who knows if you get that type of move. But again, if you're looking just to trade for volatility, you'd be buying the one to the upside, selling the one to the downside, and you can see that you're looking at about $29 total, which is 2.9 pennies to put things in perspective in this. You know, you're looking at a 20% pie, $200 pie.
So the movement that we've had this morning thus far.
Yeah, so to put things 29 cents, you're looking at either 350.29.
Okay.
So, you know, visually. 350.29 right up against
trading there
there.
at 6 o'clock this morning.
That becomes your break even to the upside. And then close to 3 pennies again to the downside, you know, if you were making that trade.
Oh, that's interesting, man. That's almost the range. That's a little below the range this morning, but the upside here. Let me bring up.
Go for it.
Okay, so let's see. And make sure I get the right contract here. So natural gas right now is 353.
That's a different contract. I'm just like,
Okay. Is it the
Because I realized it instantly because we're trading at 350.
Okay, cool.
I know, you know what I mean?
Let's go back to that for a second.
This is the February. Nadex is looking at January.
Okay. So you got...
there it is, January. And we're at literally 350 on the dot.
Okay, so I gotta figure out what is the symbol for January. 1 second. Thank you. Okay, 1 second. I think 1 second. No.
NGF Basilis.
Oh, awesome. Thank you.
Mr. Chapman coming up at 11 o'clock, chiming in, contributing already.
Thank you, Basil. NGF7.
There it is.
Okay, so. Well, I think I like this trade. Okay, let me see what we got here. Okay, so. Oh, interesting. Look at, oh boy, the range has already happened. Oh, so this is going to be interesting. Okay, so you come back down to where you had some strength yesterday. Hey, so we need two, almost 3 pennies, right?
Almost 3 pennies.
So 52.
Yeah, call it 3 pennies for break even, probably with commissions in there and so
52
forth.
yeah, let's do this.
Okay, let's do this.
We can get, to me, right there, we can get 55 in a heartbeat.
Okay.
So,
yeah, sure. Okay. So dropping this down again, going over it real quick again for everybody, 350 to 370.
Yeah.
We're buying that. What do you want to do? A couple contracts? What do you?
Let's do 5. So what we're doing here, folks, we're looking for volatility. That's all we're looking for here.
Sure, because realistically, you know, and just it's perfect you're going to cover it because there's no value in almost both of them, intrinsic value that we just bought right now, which is great. And
this is really, this is one of the better ones that was set up at the beginning.
And that's why it's only $29 combined with the two, because where it gets expensive is that you're always going to be paying premium on both sides, right?
Right.
You got to be paying premium on both sides because they both have, you know, an option function where you're risking a small defined amount for a much bigger reward. So you're going to have to pay premium. But you don't want to have to waste money up front to pay for intrinsic value if that's really not what you're banking on.
Right.
You know, and that's where it works out really well when
Right.
it lines up, you know, to the almost, what are we at? This is 3.5. So we're at tenths, hundredths, thousandths. We're almost at like 1/10,000th of a point away from, you know, the exact. Now that's the exact dollar.
No,
and
even
really
so,
pennies
that's
are big.
pretty cool.
But yeah, no, even in terms of, you know, this decimal, the 350 is the 100th, right?
Yeah.
I mean, that's where we're looking for 3 pennies of movement to break even, and this is trading, you know, 2 decimals. It's trading at 100 ticks within that, which is pretty cool.
That definitely is.
Yeah. So we'll see, but it lines up nice, and you know, $29 per contract. Either way, if it even just expires 2 pennies away, you know, you're only losing 33% of what you put up.
Right.
It's nice when there's that small defined risk.
So this is our third trade in this, as I've been tracking.
Sure, right.
You know what I mean? So
Yep.
we'll see where this baby goes.
We sure will.
That,
What do we got? We got 6 minutes.
Next 6 minutes. That's a beautiful thing. So let's go back to the broad market and see what we got happening out here. You get the Dow's up 97, Nasdaq's up 22, S&Ps are up 7. If we go inside the Dow Industrials, we take a look at the strength versus the weakness. The strength is American Express up 1.7, Goldman's up 1.5.
Look at that. Goldman's up. Go.
Goldman doesn't stop. Man. I know that he's. This is, you know, Gary Cohen, who.
God bless anybody out there shorting Goldman right now. But
Yeah, exactly. Off for the next 4 years.
yeah,
probably.
exactly.
You know,
Man,
so
look at that chart.
totally. And what you're going to see here is that 250.70 is the high from 2007. 2007. That's 2016.
Things are going to go okay for Goldman in the near future, I imagine.
Yeah.
The market imagines the
Yeah,
same.
there's no doubt. There's no doubt about that. The thing that's intriguing, of course, is that how it works with the amount of equities that Cohen actually gets, and then he can.
What do you mean equities he gets?
Well, his options, he can sell them immediately.
Okay.
Because that's Goldman rule, right?
Yeah.
And then, as long as he buys treasuries, he will never have to pay tax on it.
Sure.
Okay. Now watch what the difference is. This is intriguing. So Tillerson, right, at Exxon, it doesn't work the same way, and this is why. The option.
So you're talking about liquidating all their assets.
That's right. That's right. So what happens with Tillerson is that the stock that he actually owns,
Yeah, the equity stock, the Exxon stock that he
owns right now, he will be able to defer the taxes, and if he buys treasuries, he won't have to pay the tax as long as he keeps the treasuries. Okay. But his options that are not, what do you call it when they're
realized or
they're not realized
vested,
yet, right?
I don't know, but yeah.
Even if Exxon allows him to vest them immediately, right? Then he will have to pay taxes on those. It's not the same thing.
Okay.
So because the rule, so it's Goldman. That's how smart Goldman is. Goldman's so smart that they have a rule in place that if you go to the government, and Exxon doesn't. So if you don't have that rule in place, he doesn't get that extra. Isn't that pretty cool?
Yeah.
I mean, just understanding that.
Yeah.
Do you know what I mean?
Definitely.
I saw that yesterday how they were doing that. I says, oh, this is intriguing how that works. You know.
Yeah. Definitely.
You stay right there, folks. Tommy and I are going to be coming right back with those gas numbers for you. Dow right now is up 100. You get the Nasdaq up 25. S&Ps are up 8. Gold's down 33. Silver's off $1.11. Silver's down 6%. Pretty intense. Bonds, notes and bonds might came back. We'll stay right there, folks. We'll come right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Okay, so gas come out. We'll get to those numbers. We got a nice little spike here, though. We just went from 351 to 357.
That's a decent move.
That's a big move, man. There's no doubt.
Yeah, so it looks like natural gas stockpiles fell 147 BCF, billion cubic feet, so down about 150 billion cubic feet. And we'll see where the estimate comes across. But guess what? The market thinks that's a big miss.
Yeah, no doubt.
So this works out well in terms of, you know, you only need 3 pennies. Here's our break even to the upside.
Okay.
You can see where the market is. And the market hasn't even reset itself. It's moving so quickly right now is what's going on. So here's the 350 to the 370.
They better get that thing reset.
Yeah, it's moving quick, man. There we go.
There we go. Okay. So.
Yeah. So that's where you're going to have to make a decision now, right? I mean, you have about $70 to the upside of value, 66, 70, you know, and again, you're in for about 29 combined. So
I can take one side of that off right now.
Half of them? Is that what you're saying?
Well,
what is one side?
One side would be the bull side. Here, let me just pull this up again because I was thinking it was going to go to 355. I mean, when we were looking at the
definitely, but in this case, I wouldn't expect with that type of a move for it to get back under the 350. You'd essentially be closing the trade, in my opinion.
Yeah, no, I understand.
That's it. Yeah.
Yeah. So NG was NGF, right? NGF7. And what will happen when you look at this, folks? It's
delayed. Yeah.
It won't hit it. But what was happening is that so the key was coming into here, and then it's like, okay, so you're gonna pop. Oh, look, it's popping right up to there.
Yeah, even higher than that.
358.
It made it pretty much up to that.
So 358 was the high of today. Let's go back to that. Let's see where we're at.
Yeah, we're at 357.
Okay.
Yeah, so I mean, you know, just going back to it. Here's all your profit, obviously. Yeah. So unfortunately, I think when this is moving fast.
Right. Well, that's interesting. So What did? Oh, that's right. I had 5 contracts though. I was saying it was up $270, so that was a lot more than I was expecting, right?
Yeah.
But I had at risk. What was it on each side?
29 per contract, so about $150.
Okay, that makes sense then. Okay.
Yeah, and then Yeah, so it looks like this is a fast market, and what happens is when bids and offers get hit, they'll be replenished. I think it's within 30 seconds, but that's still there you go.
Yeah, that's big,
something to be aware of for sure.
That's a big move
for sure.
And that's where what also does happen, folks, is that you can actually have your sell side in also.
Yeah,
that's the reality. Now what I'm not going to take this position off, and one of the main reasons I'm not going to take it off, and we'll pull that up.
Okay.
We'll get more information on it. So 2 different things. I think if this was the drawdown now, we know, and I'm doing this 2 different ways. Okay, technically that it wanted to go there, right? Fundamentally though, right? There's a 2-week cold spell that's coming in right now up the Northeast. They're getting toasted right now.
Sure.
Well, toasted they're getting frozen out.
Yeah, right. Why don't we? Can you pull up
the live?
They're not going to have a live, I don't think, on natural gas.
But we can pull up.
Just even try pulling up the news on that natural gas.
Yeah.
NGF.
So, yep. NGF7.
Yeah, there we go. So the median estimate was 134. That's what, and they missed by 147. So even when they're expected to miss by, a drawdown of 134 billion, they have a drawdown of 147. And
it's still cold. I think that's probably one of the big things.
Sure,
too,
and like
right?
we know, there's lots of stuff in here in terms of U.S. gas inventories. It goes across the span to demand and so forth.
So let's pull up UNG for a second. I know a lot of the Tigers like trading that thing. So the UNG just went from $8.79 to $9. The UNG's the ETF structure for that. That's going to need a little more juice. It's interesting. Okay, I see that. So that can test the 908. You're at 902 right now.
Sure.
Let's go to David in Orlando. Hey, David, what's going on?
Hey, Tom. And Tom, how you doing?
Hey, David. Doing great, man. Yourself?
Doing okay, thanks. Hey, I've got kind of a bigger picture economic question for you. I'm hoping you can help me think this through. With the U.S. dollar having been so strong and even stronger after yesterday, and the prospect of more rate hikes in 2017, and the stock market has been going up with it, if the dollar finds a way to hit a short-term top and start working its way back down, generally that's when the stock market also excels. So if the correlation has been the same on the way up with the dollar, with a strong dollar, do you think it would continue if we have a little retracement in the dollar?
Yeah, I know what you're saying, man. I mean, it's intriguing. Is it just that the stocks just want to go up? Period. Right. That's I don't know. That's the reality. Do you know what I mean?
That's $1 million question.
Yeah.
Right?
The correlation on if you, I, and Tommy, we owned a company that was doing business across the world, would be flipped out right now that this dollar is so high.
Sure.
So our bottom line would go down. That's just how it is.
But it's not like corporate earnings were knocking the cover off the ball anyway. And so if you have, depending on the estimates, 47 to 50% of the S&P 500 companies' earnings coming from overseas, and you have the currency risk, don't you think that fourth quarter earnings are going to be something less than they otherwise were expected to be, yet the multiples keep going up? You've got the Dow at like a 22, 23 multiple?
Yeah, this is the highest since 1996 right now. That's where we're at. That's the number they come out in Bloomberg this morning. So it's a big number. There's no doubt. So.
So I guess beyond the it's interesting to have the conversation about it, but I guess then what the heck do you do?
Well, I wouldn't buy it.
No, you can't chase a rally like that. You just can't.
No, I would. To me, what you have here is there's a couple of different things that I think is still happening. Is that I'm not buying into the aspect, number one, that the rates are going to continue a lot higher. And there's a couple of reasons for it. That, technically, these things are coming down hard. The dollar, is it going to go to $1.13? Well, I guess it can. But for the rhetoric that is coming off Trump, that would destroy everything and anything that gets in the way. He claims that he wants higher interest rates, but wait till he gets in office. The bottom line is that higher interest rates will take this economy apart in about 2 seconds. So I don't believe that either. So we'll see what the market does to it. The correlation now inside the metals market kind of goes like this. Well, it does go like this. It's like, okay, what is the growth rate versus what is the interest rate? And as long as the growth rate is higher than the interest rate, then commodities still have a chance to go to higher price. My take there is that between education, food, and health, we've been on, they claim that inflation is just slightly below 2%. It's like, who's...
Well, as the father of 4 teenagers, I can tell you that's not the case.
I know. I mean, I think for any of us, I mean, sure. I just don't get that. If that was the case, we'd all have so much money, it would be insane, right? We'd have extra money.
Are you going to commercial break right now?
Yeah, stay right there. You stay right there, folks. David's coming back with Tommy and I. Dow up 113, Nasdaq's up 28, S&P's are up 10. We're going to break back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow right now is up 117, Nasdaq's up 34, S&P's up 11. We're talking with David from Orlando, and we're talking metals, markets, inflation, all of the above.
Talking the question everybody wants to know the answer to. Right?
Totally.
No doubt. Thanks for holding me over the break, too. I guess the second half of that question is, and I'm looking at this pretty simplistically because I guess That's how I think. But if interest rates are going up,
Right.
which is typically not good for gold and other commodities,
Right.
but higher interest rates means higher inflation. And commodities like gold are inflation hedges. At what point in a rising rate environment do you then want to own commodities?
Well, so it's so cool what you're saying here, because I'm trying to figure out that the mantra with all the financial stations right now is exactly what you just said, that, hey, listen, rates are going up because we're going to have higher inflation. It's like, okay, really? So we've been at such a low rate for such a long period of time worldwide. I have a hard time digesting that. If that's the case, and this is where we go back to the markets again, well, why are the markets continuing higher? Because fundamentally, these markets should be getting killed, because if the rates continue to get higher, that means there's no more free money out there. And what has happened is that the free money has come into the marketplace and continue to buy because you want to get rid of your cash because it's free, right? Or if it's not free, it's a couple percent. So that brings you back to the aspect that if the inflation rate is actually higher than the interest rate, then you could actually get markets going up and commodities going up. So because it's just a matter of, okay, that a hard asset would go up. Now, I still wouldn't buy the markets, but you can make the case that companies also will go up because they're just making more money. You know what I mean? Like when the inflation rages in Africa and Zaire and all these places, I remember the markets went up 2,000, 3,000, 4,000%, but inflation was raging at 200 or 300%.
Right.
You know what I mean? It's like I remember that was like 15 years ago. Somebody was looking and saying, "This is crazy, man." But what was ended up happening is that you had to buy it with that currency, and then the markets went up that dramatically.
Yeah, and that's what's happening in Venezuela right now.
Yeah. Right.
Yeah.
Right.
Yeah. So I guess we just have to kind of sit and let things unfold a little bit. I don't know how much seasonality affects this. This has been on such a tear that there's got to be some sort of a mean reversion, some profit taking, something that kind of helps level things off and then lets you reassess and figure out where you really think things are going.
I totally agree with you. And so picture this. This is so funny. Like this morning, I was going to put that in the newsletter, but the fact of the matter is that we don't know, right? Do you know what I mean? Because I felt the same way. I said, you know what, this is insane, but I have nothing to back it up on. Do you know what I mean?
Sure.
But that's how I do feel. That it's like, you know what? When I look at it, whether it's a piece of metal or a piece of gold, and I look at the markets and the dollar, I'm saying to myself, I'd still rather own a piece of gold. That's just a personal deal. That's all it comes down to. And you know what? I'm a risk taker anyway, and I can take a lot of flack. And I'm not over my head. So there's a lot. The reason that I don't want to do that mantra out there is that each one of us individually have different risk parameters, and as to how much you're putting somewhere, and so I got to be careful with that aspect of saying that. But that's how I feel. That's I feel just as solid right here, as I did yesterday and the day before. And I know it's weird, and I can be totally wrong too. That's the other side of it, and that's why.
At some point, you start to get where we were a year and a half ago, which is, what's the lift cost to get gold out of the ground and other things like that. And I just look at fundamental measures like valuations. I mentioned the Dow on the other side of the break, and it's multiple. The S&P's at 25. I mean, the Russell is at 200. I don't know. At some point, sanity has to come into play. Even if Trump were the savior and his economic policies were going to be that great, it's still going to be 2 years before anything that he does legislatively is going to take effect into the market.
Well, my take is that, guess what? They're going to just divvy it up. Doesn't mean you and I get anything or anyone else gets anything out of it. So I'm not buying that for a second, man.
I hear you. Well, look, I'm monopolizing you guys long enough. I appreciate you.
Okay, have a great one, man. Have a safe one.
David.
Thanks, fellas. Take care.
Yeah.
No, and I agree. He's saying even if, right? Even if.
Right.
That, you believe that.
And bureaucracy.
Best case scenario, and I know you don't, but follow even if, right? The market might be a little bit ahead of itself. as to how fast things can go if that's
and that's what markets like to do too.
Oh, sure. Just look at any of those charts, man, and
that's what markets like to do.
And time flies, right? As in, we're already 5 weeks past the election already?
Yeah,
we're 6 weeks past the election,
right?
As in, don't expect like in 2 months the world's going to change.
Right.
That's just, we're already almost 2 months after his election, let alone he'll be in about a month from now. It's going to be 3 months down the road, and there's not going to be change yet, and then they're going to be talking about it. So that's, and earnings have to catch up immediately for that to be rationalized.
Right.
So,
and in particular, what happens is that this is a bureaucracy versus a company.
Right.
It's a different ball game. Let's go see how my natural gas is doing out here. So natural gas.
Oh, that's not good.
See that? I should have took it off.
Yep.
Oh boy. Okay. So
we got 11 minutes until expiration. We're trading at 354 right now. So you're just above break even. Still in a mildly profitable position, but not the move you wanted for sure. That's a bummer.
358 was a better deal.
It certainly was.
No doubt.
Yeah.
No doubt.
Hey, we got 11 minutes left. Hopefully it stays there or higher, right? For sure.
No doubt.
Yeah.
Let's go take a look at some of the higher volume stocks, and we'll see whether this is a high or low volume market in a second here. You got, what's going on with Pier 1? That's been a dog. That's up 25%. It's up 226, trading at 874.
Yeah, even that's like 33%.
Yeah, someone's probably taking it over. Let's find out. Okay, so no, its earnings beat. Wow, how about that? Interesting.
Quite a beat.
Yeah, there's no doubt about that. You get GE up 9. We got Wells Fargo up $1.17. Mondelez, that's a rumor it's going to be taken over. Mondelez is a trip because what happens is that Mondelez was spun off by Kraft. Heinz ended up taking over Kraft. Now Heinz wants to take over Mondelez too.
Okay.
Round
and round.
Round and round we go. Some of the Dow stocks, if we take a look at some of the Dow stocks out here, you have Caterpillar up 36 cents. We got IBM up 50. You got the Citigroup up 61. DuPont's up 89. If we go take a look at the XLF, the ETF structure, that little baby, this is going to be interesting to see how they... Okay, so this is testing the high from yesterday, which is a 23.83. And we'll see whether it can hold. Because what did happen yesterday is that, which I thought was unusual, is that the banks were pushing down with volume when they should have been going to the moon.
Because they should always be going to the moon, man.
Yeah, totally.
It's a brave new world.
It's not only a brave new world. They're the only ones that can get away with ripping people off continually and just paying a fine. It's a beautiful thing.
Deal.
What a business model that
totally
is. Stay right there, folks. Tommy and I are coming right back. Dow's up 115, Nasdaq's up 27, S&P's up 9.5. We're going to be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. And folks, as you come over to our website at TFNN, you're going to see we're doing the annual Salvation Army Tiger Dollar sale. This one here is a little different twist in it because everyone gets a 25% bonus on Tiger Dollars, and then we will give to Salvation Army 10% of the cash value in your name. Salvation Army will send you the tax receipt so you can write that off on your taxes.
Yeah, great deal. Just going through 3 different levels. You buy 600, you get 750. You buy 1200, you get 1500. And then you buy 1800, you get 2250. And in each one, 10% of whatever you spend, either $60, $120, or $180, is donated to the Salvation Army. So this runs through next Thursday, week from today. Yes,
wow.
Week from today. I had to pause on that one.
Quick.
Time is quick. And, you know, Tiger Dollars are great. If you subscribe to anything, you plan on subscribing, they can be used for any of the products. They don't expire. So whether it's a newsletter, you know, whether it's, you know, Basil Chapman's course, right? I mean, he's coming up next Tuesday. The 20th will be a second class. You can buy Tiger Dollars. You can apply them to Basil's course. You can get in there. You get the first archive right away, no matter what you subscribe to or if you're going to partake in anything coming up next year. Great deal. Great to raise some money to the Salvation Army. Like I was saying, I get to usually bring that check down to the local Salvation Army. Right. And it's a great deal. It feels nice.
And they do it.
We appreciate the Tigers. You know, it's like, it's an awesome deal being able to bring that down when they're the ones giving that money, for sure.
It is. Yeah. And they're very efficient, folks. They send that, we give them the spreadsheet with the names on it, the address. They send it right out to you directly.
They know. I mean, you know, the donation isn't made by us or TFNN. It's made by each of the people.
Right. Which is pretty cool.
It is. That's a nice way of doing things.
No doubt, man.
Because that's really what it is, right? It's not really us giving it. It's them giving it.
Yeah.
Right?
Which is where it's at. Yeah, totally.
So what's going on here, man?
Not good.
I know. That's a bummer.
Should have took it off.
That's a bummer. Quite a reversal.
We on natural gas, we're talking about, folks. We went to 358. I'll break even on it, I think. Well,
depending on the next 3 minutes go, right?
I need no.
You break even right now.
Yeah.
That's. I mean, we put the lines here for a reason, right? Yeah. Remember? I mean, that's where we're right. You know, that's.
And that's where my fingers should have been faster, folks.
Yeah.
Because if you actually take
quite a reversal, man. Though.
Well, I mean, but if you take a look at where I was expecting it to go, that's exactly where I thought it was going to go.
Yeah.
You know, so I should have took it.
Yeah.
That's the bottom line.
Yep.
You know, it went to the top of the range. It had rejected NGF.
Now again, this is going to be the delay when we pull it up.
But
just so as it comes up,
it's there now.
No, it's because it's still at 355. And
no, I understand, but it went right to the top of the range. And that's all you can expect.
Right. No,
well, yeah. That's the bottom line.
Yeah.
So. Hey.
So it goes, man.
That's how it goes.
You
can't cry afterwards. That's the bottom line.
Yeah.
You know. Bad scene though.
That's unfortunate.
Now that's absolutely a mistake. But
I think you're being a little bit retrospective in hindsight here, just in that if that continues to go up, we're not sitting here at the end of the show saying, I can't believe I made a mistake and I got lucky. That wouldn't be the discussion. So
yeah,
you know,
on a short-term basis, normally I take that very quickly. That's my point. Do you know what I mean? If I'm day trading, I go from swing point to swing point. That's my point more than anything. Yeah. So if we take a look at the volumes out here as we're coming into the close, it's going to be light volume. Okay, so right now, it's still early in the day, folks, but this is light volume as these indices are testing. It looks like they're testing right where the Fed came out yesterday. Yeah, they are. They're right at them. The SPY's right at it. The Qs, let's see where the Qs are. The Qs, they're all at it. Right there.
Yeah.
230.
Big moves.
You stay right there, folks. And man, Mr. Basil Chapman's going to be coming up next, growling a problem with you. Then, of course, swim lessons. Steve Rhodes, Dave White, myself, and Andy's going to be back.
It.
Thanks, pal.
Thanks, man.
Wow! Go get him, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.